Hi, good morning. Welcome to Kotak Securities weekly fundamental podcast. I am your host Rini Mehta. Last week both Nifty and Sensex lost around 1%, but mid-cap and small-cap outperformed the large-cap index. Macro sentiments remain volatile as frailties in European and US banks were under focus. Indian stock markets remain concerned about the slowdown, higher interest rates and valuations even as inflation continued its downward trajectory both globally and domestically. On the economy front, the US Fed increased its federal funds rate by 25 basis points while suggesting that future rate trajectory will be data dependent. Now if we look at foreign investors' participation, FIIs continue to be net buyers to the tune of rupees 14,623 crores so far in July. FPI flows are expected to remain volatile given the high inflation. And if we look at FPI flows in emerging markets in the July month, except for Taiwan and Thailand, all other emerging countries witnessed inflows. Now coming to the stock picks and result updates for the week. First is Laurus Labs. Laurus Labs delivered a washout first quarter with EBITDA margin at 14.1%, sinking to a 19-quarter low, leading to a huge 52% EBITDA miss on KIE estimates. Even as management stays optimistic and is guiding for a recovery hereon, the weakness in the core business over the past 2 years is certainly unsettling. With the Paxlovid boost gone, all eyes are on the core synthesis uptick. With a slower than expected ramp up so far, the ask rate in synthesis is now pretty steep. In any case, the business mix is unlikely to pivot significantly towards synthesis over the near term, with ARV staying relevant at 32% of sales even in FY26. So we maintain our cautious stance and retain reduced rating on the stock with fair value or target of rupees 300. Next is Cipla from the pharma space again. Cipla delivered a 9% EBITDA beat in first quarter, driven by strength across the US and India. While resonating buoyancy on near-term generics pricing in the US, Cipla has hiked its US sales and EBITDA margin guidance for FY24. The launch timelines of the key US molecules remain unchanged. Apart from the US, outlook in India and South African markets, private market stays upbeat. While we continue to await classification of the Pithampur inspection by the US FDA, we have baked in an OAI. Despite the regulatory setbacks, we expect Cipla to post a robust 19% earnings per share CAGR over FY23 to 26. So we reiterate buy rating on the stock with a fair value or target of rupees 1,230. Lastly, our pick of the week is Canara Bank. Canara Bank reported 75% year-on-year earnings growth driven by 15% year-on-year growth in operating profit and 25% year-on-year decline in provisions. Asset quality improvement continued as NPL ratios declined and slippages were at a modest level. Loan growth was healthy while net interest margins were flat quarter on quarter. The bank reported another quarter of less than 1% return on assets and 19% return on equity, led by further declining credit cost. So we maintain buy on the stock with fair value or target of rupees 400, which was 370 earlier. So guys, that's all from my side. Thank you. Signing off. See you again next week.